Tim Manfro, aka Mortgage Manfro, and we're talking about the not to do list when you're buying a home. Paying off installment debts. I've heard from so many people that they're like, well, I'm going to pay off some debt and then I'll apply for the loan. And what people don't actually know is that credit scores, FICO scores, reward installment loans that have a history. Okay? So if you go ahead and pay off an installment loan, like those are things like cars, right? Fixed amounts that you borrow that you pay. If you go out and pay your car off, your FICO score actually will drop. So people trying to like set themselves up for the best possible position on a loan, sometimes they can actually harm themselves. And we've seen scores drop anywhere between 20 and 50 points from paying off a car. Now, if you have to pay that car off or that debt off to qualify for the mortgage, that's okay. We can actually do it during the transaction. And that way we don't have the hit on the FICO score that could affect you negatively. Paying off credit cards. Now, this can be a good thing for your FICO score. If you have a limit of $10,000 and your credit card balance is $9,999, you're close to that limit and your score is being affected. Now, where we can go wrong is basically once we pay those balances down, we're going to see our credit scores go up. Unless you close the credit card account. So many people have done this before without consulting a lender like me. You got to make sure to keep those accounts open. It's actually going to reward you to have that balance paid down when you keep the account open, because the history of having that account open is the positive thing. So when you pay the credit card balances down, that's a good thing. Do not close the accounts. One of the things I've seen people do so many times that's damaged your credit is they open a new account, okay? And if you've ever noticed, when you get a new account, your score actually drops because there's no history of that account. And sometimes people get these opportunities like 0% interest, balance transfer, opening this new card, get this discount when you're at a store and you open a new card. Do not do that when you're in the process or thinking about buying a home soon, because your score will drop. You would think opening a new account would be beneficial, but it actually is not. It takes a while for your score to go back up. So opening a new account, one of those things you do not do when you're in the process of buying a home or thinking about buying a home in the future. Changing jobs. Now, obviously, that is something that you would think you would not want to do, okay? And it can affect you negatively. Now, you can change jobs in the same industry. It wouldn't affect your actual loan process. But some of the things we got to watch out for is if we're going from like being paid hourly or salary going to commission, right? If we're full commission or a big chunk of our money is commission, that's going to be an issue. We have to have a history of that. Or let's say we're W-2, now we're going to self-employed. Right? Self-employed, you're going to need 2 years of history of filing self-employed taxes. Even if you're in the same industry doing the exact same thing. We've had people switch from W-2 job to a private contractor where they're 1099. So you can change jobs, but there's certain situations that you would not want to do it. It's going to be a no-no when it comes to basically purchasing a home and getting financing. Money being deposited into your account. Okay, you might think it's okay for you to basically deposit money in. Once it's in your account, it's okay. We can use that to buy the house, but that is not the case. Sometimes that can derail your plans. So depositing cash, getting Zelle from people, money from parents that you're going to use to buy the house. There's all ways that we can use that money, but we have to go about it a certain way. So you can't just deposit money and basically use it to buy a house. They look back 2 months on your bank account statement. So if you were to do that, you'd have to wait 2 months to use that money if you didn't go about it doing it the correct way, setting it up as a gift or a transfer showing that you sold something. So make sure when you're going to make moves on moving money and you want to buy a house in the next 2 months, you want to make sure you consult us and check that out. Don't assume you need 20% down. Don't save forever without trying to figure out if that lines up with your plan. So many people think you need 20% down. That is not the case. First-time home buyers can put as little as 0 down, 3% down, 5% down, 3.5% down. We have tons of options for you. Sometimes waiting, the house can go up in value, the market shifts, can actually be detrimental for your payment. The cost of waiting, sometime I just ran some numbers for someone, and actually like with the forecast of home appreciation in the area they were looking, even if the rates were to drop and they saved up some more money, their payment would actually still be higher with the values of houses going down. You can never change the price you paid for your house. So do not assume that you need 20% down. Do not assume you need to sell your house to buy another one. Okay? Now, it's obviously possible to sell and buy contingent. It happens all the time, but there are tons of opportunities for you not to do that. Depending on your exact situation, you could qualify to buy the house and then recoup your money once you basically sell the house. You could basically take advantage of some programs that we have to help you basically buy before selling. There's all kinds of opportunities. Don't assume that you actually have to sell before you buy. This could strengthen your offer and give you the opportunity to go in more aggressive on a property that you want to buy. Do not skip the pre-approval. Do not wait for the pre-approval. This has been such a bad thing for so many people that are just like, well, once I find the house, I'll go through the pre-approval process. I got news for you. A real pre-approval process takes a few days. Even if we're pushing things full speed ahead, you've got to gather documents out, fill up the application. We have to review it. We have to research your options. So sometimes waiting until you basically find the house that you like means that you're going to definitely miss out on that house, and that could be the one that was really meant for you. So waiting for the pre-approval is something you do not want to do. We have opportunities for you basically to get pre-approved without doing a full pull on your credit. Even if it's planning in the future, we can get you situated. You can figure out your max pre-approval, your interest rate, your terms, all those types of things that are going to help you make the best decisions when you're searching for houses. Do not depend on TikTok or social media to get all of your information. Now, obviously, I'm putting this information on social media, so I'm sharing this with you there. But so many times people have seen stuff on social media and not verified it with a real lender or someone that really knows what's going on with their situation to make sure that that technique or that thing that they're talking about would actually apply to them or help. I've had multiple people come to us with stuff they saw on TikTok that is so insane and will not work and would actually be a detriment to their situation. Once we verified and I explained why, they totally understood. But don't just go there and research the information and just assume it's all correct. Your situation could be different. So relying on social media, doing that research is a good thing to do, right? But you don't want to take it as like the exact thing for your situation. You got to talk to someone like me that's going to look at everything and help you figure it out. Do not let someone else decide if it's the right time to purchase for you. Okay, it's a personal situation, and your uncle that bought a house 40 years ago that for 60 grand is not going to be the right person to basically tell you, or even people that you trust are doing it right now. Your situation is going to be different. Okay, everyone's situation is different, so you have to look at your basically qualifications. Can you afford to live where you want to live? Do you have the money for the down payment or access to a program? Can you afford the payment? Do you have the cash you need to basically buy the house? If it's a primary residence and those things line up, it's most likely going to be a good idea for you to buy, but not always. So you got to basically make your own decisions. You need to get educated by people like me and help you figure out what your mortgage opportunities are, and then make those decisions yourself once you're educated with your exact situation. So home buyer not to do list, do not let other people decide if it's the right time to buy for you. Tim Manfro, aka Mortgage Manfro. Comment, send it to get the full list sent to you. Thanks for checking it out.